What's going on, YouTubers? Today I'm going to talk to you about the EMA cross strategy. We're going to talk about the inputs. We're going to learn how to put it on your TradingView chart. We're going to talk about the golden and the death cross, learn how to manually trade this strategy. We're also going to show you how to input this to a backtester and explain the backtesting results. First thing you're going to want to do is go to your TradingView. Now I have the TradingView app. You can do this on TradingView.com from a mobile browser or your desktop browser. It doesn't matter. I'm using the desktop app on my desktop. So I'm going to go to the indicators here. Now I've already favorited my script for this. If you don't have this one favorited, I will leave the link in the description. But if you don't have this one favorited, all you have to do is come right here and type in EMA cross. And you can find this from somebody else as well. There's plenty of EMA crosses out there. The one by D-Mark is pretty good. It allows, I think, up to 5 input variables. So you could put that one on if you don't have mine favorited, or you can put mine on because it simply allows you to put up to 5, which is pretty cool. So I really only changed it and made that adjustment because I like to have 5 on mine. But also you can come here and take off as many as you need to. So I'm just going to have the 50 and 200 on. So let's go ahead and talk about these inputs really quickly. The EMAs are exponential moving averages. Basically, they are the average price that somebody paid over a specified time range. So I'm going to make this a little bit easier for us to understand it. First, I'm going to go to the daily time frame, and we'll just go ahead and take a look at today's candlestick. So for today, we can see that our EMA value of 50 is displaying right here. So when I put the candlestick here, we can see our EMA value of 50 is 41,641 and 70 cents. That means over the past 50 days, people, and you see it just changed, and this is due to live action changing. Over the past 50 days, people have paid an average of $41,639 based upon the past 50 sessions worth of information, which is 50 candlesticks, which on the daily time frame is 50 days. Now if we're looking at the 200 EMA, it's the same thing. Over the past 200 days, since we're observing the daily time frame, over the past 200 days, people have paid an average of $44,075 for Bitcoin. So it's safe to say that the current market price is trading below the average price being paid for Bitcoin. Now, just for a little bit of perspective, I don't want to use the 4-hour time frame to confuse you. So let's just go ahead and jump to the 1 hour really quickly. So now we can see, I'll just look at a random candlestick here. We can see that on this candlestick, we're going to be looking at these numbers again. The EMA value at 50 was 39,591, and that means that people on average paid $39,591 for Bitcoin over the past 50 sessions. And now that we're on the hourly time frame, we're observing hourly candlesticks. So over the past 50 hours, that was the average price paid for Bitcoin. And then you can see the close price as well. So we have open, high, low, and close. I think I was on one of these two candlesticks. So you can see the candlestick open, high, lows, close prices compared to the average price paid for Bitcoin. I'd like to point out that we can come here to the inputs, and as you saw at the beginning of this video, I unclicked these. So these are my other values, and the inputs are right here. So I can change the value to whatever I would like. If I would only like to use 2, I can just click these off, and as I said, we're using the 50 and 200 EMA for this explanation in this video. Now, if I want to change the inputs right here, I can change this to 100, 200, and it'll give me a different value. So now it's taking information over the past 100 sessions, and I already had that value there, so that wouldn't really make sense. But if I wanted to change it, for example, 75, I could do that. And that just means we're changing the number of sessions being observed for the calculation, and that just means that since it's the 1 hour time frame, we're changing how many hourly candlesticks we're observing. Same thing, if it was on 5 minutes, it'd be observing 50 5-minute candlesticks. If it was on 4 hours, it'd be observing 50 4-hour candlesticks. So now that we've got that out of the way, we're going to talk about very simplistic ways to understand and interpret this. So you can use any values you like. 9 and 26 is a more short-term crossover strategy, and the 50-200 is known as the golden death cross strategy. So generally, when we have a golden or a death cross, it signals a long-term price change. So not all the time, as we can see here, this is a false signal where price come up with the EMAs coming up and then it crosses back down. But as we can see here, this death cross was actually a very good indicator of long-term downward price movement, right? If we're looking at the death cross occurrence coming back to the golden cross, that time frame is 14 days. So this simple indicator right here projected that we would have some downwards movement, and as long as price stayed trending underneath the 50 and 200 EMA, right? Price did not break above this ultimate rejection level, right? This was resistance, dynamic resistance. So price continued in a downward descent until it starts to test and flips over. So this golden cross is not a good example, but I will try to find a golden cross, and we do have a good example right here. So price was bubbling down underneath. We have the golden cross. There is a confirmation, and we have upwards price action again until that death cross. So essentially, trading the golden or death cross is just waiting for these values to cross over and initiating a position based upon the cross. If it's a death cross, you would take a short position. If it's a golden cross, you would take a long position. Now there's a couple different ways to do this. As I just said, the very simplistic way to do this is to just set up an alert for this strategy, and you can go to something right here like add alert, so we can put whatever value we'd like. This would be our first plot, which is 9, 26, 50, 100, 200. So I could put plot here for 50, value crossing. Now I can do up or down. So if I just press crossing, that means I would get an alert every time that these crossed on this time frame. And since we're observing the 1 hour time frame, it means every time that they crossed on the 1 hour time frame, I would get an alert. If I set this here, let me put that to 200 now. So we're using that one. So now it's 9, 26, 100, 200. Because we're already using the 50 here. So when the 50 crosses the 200, now I'm going to get an alert, whether it's up or down. If I wanted to automate this, I can choose if it crosses up, I can set to go long, or if it crosses down, I can set to go short. And those are just very quick ways to set an alert for it. You can plug this into Exchange with API keys, but that would take a different video. We're just talking about the strategy here. So if you want to manually trade the strategy, that is how you can get an alert for the EMAs crossing over. Now there's a different way to trade the strategy, and that is betting that price will have a reaction. So imagine if you actually didn't get in here. There's a couple ways to trade it. You can trade the rejection off this point or at that point for a touch. So for example, if we've already missed this, we're waiting for price to come back and retest. And if price comes through this motion here, if price comes through this level, let me set that up on a replay. So as we're waiting for price to approach this point here, we see prices coming to this level here, and we already saw a huge knockoff. So at this point, we're speculating that price is going to face rejection. So we can wait for price to come up into here and try and play this rejection test, or we could place a short right here based on this rejection test. Now we've already seen what's going to occur, so it's a little bit unfair, but that is how you would play it. So you could try and place your entry along this value here and take a short position, or ultimately if price stops you out of this one, then price is probably going to come back up here, and you can wait to play this and readjust this stop loss here, and now you'll be taking an entry somewhere along those lines. But again, it's not fair because we do already know what's going to happen, but I'm talking simply how to trade the strategy. This is one way to trade it. So now if we're just moving forward and looking at this here, we can see that candlesticks have poked above this level. So naturally we'll be waiting to see how it treats this. So we could try to place our entry somewhere along this level and a stop loss below the 50 EMA, so if price comes back down, the downtrend's still valid. So you didn't want to be involved in a long. And that's pre-speculating on the cross. Or you can wait on the cross and then buy that retest. So after you see this cross, you don't immediately jump in, but you wait for this retest, as you know price must snap back eventually. It can't stray too far away from the average mathematically. And now that it's crossing over, it could potentially use it as support. So if you're seeing something of this nature, right, there's a couple ways to spectate on this. So if you're seeing something like this, you could spectate your long here before they cross, and you'll probably want to place your stop loss below this level, as if price comes down, it's naturally going to continue in a downtrend direction. And then you're going to want to try and place your take profit target where it's at least 1-to-1, because if you can't find that, then it doesn't make sense. And you want to try and move this up to a recent area of resistance. So right here would not be 1-to-1. So you want to try and at least play that would be 1-to-1, and maybe even here would be fine. So again, we already know what happened, but that's how you would attempt to play if you didn't know based on the EMA crossover strategy. And then once you get into profits, you could do whatever you like with it. So now let's imagine we didn't see that information. And now we have this crossover here. So we have this crossover, right? And we're not jumping in immediately because price is pretty far away and we think that there might be some snapback. So we're going to try and wait for an entry along the retest where candlesticks come back down and retest. So right here now we want to speculate. Now we're going to try and take a long because our dynamic resistance is right here and our previous swing low now, because we have different market structure, is right here. So we could place a reasonable stop loss at a very close range and not risk too much here. This would be a very well placed trade simply because of the values where they are, right? When we were placing this trade back here, we could potentially run into that. So that's why we had to extend our stop loss so deeply. Now we can have a tighter stop loss and be assured that if, okay, price breaks down below here now, it's probably going to continue the downtrend and this was a failed retest. So then placing the trade and trying to move forward, that's about how we would do it. You can always set up for different targets as well. And even then, once your trade is complete, so we had to take profit there. We can go ahead and, let me back this up now. We had to take profit there. So if we wanted to try and play this again, we'll simply wait, and now we can buy that retest or buy this 200. Let me extend that so we can see where these values are. Or we can buy this 200 EMA again. So we'll wait for the retest. So we're waiting for that one. If we did not see this candlestick right here, which a lot of times we will not be able to see the future. So if we did not see this candlestick, I'm just going to try and wait for one candlestick to close. Okay, so this candlestick right here would close right here. Naturally, I would try to take this position if I was watching this, and I would say, okay, here we go again. Here's our stop loss. It's right below 200 EMA. Maybe we can bring it a little bit lower because our swing low is right here this time. So a while ago it was pretty short because our swing low was also relatively short. And this is just based upon how you can trade it manually, using it as a signal. It's not always going to give you exact targets. Now you can use different EMAs to do this, but just trading it manually, you have to be able to use some of your own tuition. So I would try to set up a trade like this, but as we could see, I think you'd be stopped out in the very next position. If not, it came pretty close. And that's just based on simple market structure. And then, okay, so we did get stopped out of that one very quickly. So that would be a failed trade once you get stopped out of it. And now you'd want to wait for the validity of this 250 EMA crossover because they're pointing back toward each other now. So you might want to try and short that. So after having been stopped out of that trade now, if you want to try and short it again, you would wait for this retest, something like this, where price comes to it and touches it. Now I don't think we're actually going to get the touch we want to play that retest. So you can try and play it if it comes close, but I would more so like to eliminate the possibility of having dragging or hanging stop losses, where stop losses are too far or in a place that's very easily to be hit. So imagine if we did see this here. I just wouldn't really feel comfortable placing a short position at this point because there's a lot of room for error here, and my stop loss is already 2%. So I could wait, reset, or try and get a better entry here and close this. So that reduces my exposure to risk by placing my trade in a better position. So I'm just going to go ahead and exit now to see where we are and where we would be. So now if I'm waiting for this, if I was watching this, I could have actually seen, okay, this is a rejection, and I could try to short right here at this point with a stop loss above here, and I could target at least 1-to-1 would be somewhere in this region, and then maybe all the way to just below previous support, which would have put the trade at a success. Now this is the live current market price, so I'm waiting for a retest now, and if price can do something like this where it comes back for a retest here and touches along this line, this gets painted maybe something like this. So this comes out, maybe does something like that, and then maybe this 200 EMA does something like this. I'll be waiting for this retest here. And I could ultimately try and play this two ways. I can try to short here with my stop loss just above the 200 EMA. Because if price comes above the 200 EMA, it might do this, fake me out, and I get stopped out of the trade. Or it might retest and go above. So if I were to enter here, that'd be a nice way to try and play it. Or I could try to wait for my entry to actually touch that 200 EMA at whatever point it comes. And then try to extend my stop loss also below this recent swing high. If I wanted to try and play the short. As long as this death cross is valid, I will try to look for short positions, and whenever it crosses above, I will try to look for long positions. So that's basically how we'll trade it on a manual strategy. And again, you can do this with any different EMA on any different time frame. You can do this on the 4-hour time frame and try to play it with different ranges. You can do it on the 1-minute time frame and try to play it with different ranges. You can do it with different EMAs. So if I take away the 50 and 100, I do the 9 and 26, then we see a short-term crossover. So now instead of playing that long-term crossover, we're playing the short-term, and we'll enter here. Same thing, we're playing this for resistance now. When it crosses above, we'll take longs, look for long entries here. This is more so for like scalping, but it depends upon really who you are as a trader. You can use the signals for whatever you like, in whichever way you'd like to trade. So that's how you'll set it up on a manual trading strategy. Let me go ahead and show you the backtest engine. So you can actually use a backtester, which will essentially show you what your profitability margin would be with whatever strategy you're trying to use. So I'm gonna go ahead and observe the 4-hour time frame because I'm pretty aware that the 4-hour and above is profitable on Bitcoin historically. So if we're looking at this script now, I can just come to the settings really quickly. And if you use a different strategy than mine, again, mine is in the link in the description below. I have an EMA indicator, so you can just simply see it without all the strategy tester stuff on your screen or trade positions being taken. And I have a backtester with the values auto-populated. So if you're not using this backtester I've selected, you're probably going to have to change this from default, and you're probably going to have to change this to order size and this from contracts or whatever it is you're doing. You will also have to put the commission for your exchange. So let's just say, for example, if my exchange has a 0.1% commission, if I'm trading a spot account, I'll need to put that, because if I'll look here at my net profit really quickly, I'm just going to observe that change. It's a small change, but it is a change. And in some cases, it can be a very extreme change. In some cases, your commission could make or break the strategy. It might not be applicable to a certain asset due to the commission rate. So make sure that you're checking that. For the purpose of this video, I'm just going to use 0.1% on commission because that's a standard exchange rate. And then we can come over here to the inputs. And now I don't have 4 inputs here. We can see there's only 2 inputs because we're testing the crossovers. So we can see here, if we're going to be using trade direction, it's going to go long, short, or both. Now I'll try to update this in the future to where I can get like stop losses and trailing stop losses. It's not exactly simple, but anyway, moving forward, you can specify what time period you'd like to backtest. So I think on the 4-hour time frame, I can actually only look to 2017. So this will change, yeah, from 2017 and up. So I'm looking at 2017 here now, and then if I change this, I can go from 2017. Let me go to 2018. So I can see for that year, I took 3 trades based on the 4-hour cross strategy, and if I took long trades only, there were 3 and they were profitable. I can come right here and go to the list of trades and see exactly what would have happened if I was running that strategy. So really quickly, I'm just going to go again. Now if I come here and see if I was running this strategy from 2018 to 2019, I can see I actually would have lost half of my portfolio if I was just following the signals blindly. 2018 2019 was a much worse year. Now, if we combine the 2 years, we still have a net profit between the two of 300%. So moving forward, if we're looking to test 2019 to 2020, we have a 152% profit margin. And then we can see each trade close right here. And we can even, right here. And then we can even click on it and see where the entry was and where the exit was. So that was a really good signal. So here's our entry. Yeah, there we go. Solid entry. February 19th from the Golden Cross, and they just stayed alive. The Golden Cross was just super valid until 2019. Man, super solid. So that's how you can backtest a range based on the time period, and you can include this to whatever range you'd like to see. Now, if we go to the current year, we could see the year to date for the strategy. I'm trying to get this out of the way so you can see the results down here. So if we go to 2022 to 2023, we could see for the year, we're actually 26% at a loss. So let me move forward to where we are now in time because I went so far back in the backtester already. So here we can see where the year has started, and we can see every position we've taken based upon this year's sideways price movement. So far, we've taken losing trades, and this might look stupid right here to see this entry for the long and close for the long right there. That's so bad. But even here, that's why I said combining human tuition with the strategy would be very great for your trades. So even if we took this long signal based on the EMA cross here, we wouldn't have had to wait for that EMA cross to determine that this was a losing trade. We could have closed out here at this first retouch, or whenever price did not make a new high. That would have been indicative that price was coming down below again. When price broke under here, it shot to this level, so really our reaction time may not have been that well. But once price closed again below that level, we could have been out right here. And we could have cut our losses by a few percent, I'm sure. Yeah, 6%. So just blindly following a backtester is not always the best way to do things, and you can see why. So that's why it's important to go into the trades, see what happens, see if you can correct the strategy with your own tuition. But if it works, ultimately, I mean, like we just saw from 2017 until now, it's a winning strategy. We've 8x'd whatever we put in there. If we were using $1,000 per trade, we only had a drawdown of 11%. So pretty much it seems to be a really good strategy over space and time. A lot of data analysts and professionals have automated this strategy because it is a winning strategy over the long term, and they're not really worried about it. If you're managing a lot of funds, it's really nice to have one or two strategies automated, and the EMA Golden Death Cross strategy is really good. So we only looked at trade direction long. If we looked at both, changes a little bit, and if we look at short, so by shorting the death crosses, we actually did not make that much money. There was still some money. There was a huge drawdown, so that was not a really good strategy. It looks like the account almost got erased, which is not something you want to deal with. So maybe just using shorts is not a good idea. That's why it's advisable to check out longs, but you're more than welcome to backtest any range. So just for example, I'll show you really quickly if by changing this to the 9 and 26 short-term crossover I was telling you about earlier, we'll get different results. So I could have 5x my money here, and then we can see where the trade's taken. We can go long, see where they're coming out of shorts. So it's just using different variables now, or different inputs to backtest the strategy. So you can go in and see, what trades got messed up, and see how you can correct them, see all kinds of different things, and use it as a signal for your trading. So remember, the backtester just goes open to close. Right now, I don't have a stop loss on mine. I don't know if there's an indicator out there or a strategy, EMA cross strategy, that exists with the stop loss, but I'll try to get it coded into mine, and when it is published and updated, if you have it favorited, you'll just automatically see the update. You won't get an alert or anything. It'll just automatically be updated whenever I figure out how to put that in there. So feel free to mess around with the backtester, even if it's not mine. It's important to backtest your strategies, and then when you find something that you think you want to apply based off backtesting results, you're going to have to forward test it. Just let it go in, and if you have to decide if you're going to be putting your tuition in the strategy or not beforehand. So if you're going to try and automate it, try to find something from open to close or when my stop loss gets updated with a reasonable stop loss risk to reward ratio that you like from backtesting, and try to work forward testing with it. Otherwise, you have to decide if you're going to just go in manually from the get-go. Just wait for that cross and then try to take an uptrend. Like, for example, if I'm trying to trade this uptrend right now on the 4-hour time frame, even without this strategy tester right here, I don't have anything telling me to take a position all within this window. But I could take a position here. I could try to go long. As price comes back into this, I could play this candlestick as this one opens. I could place a short position here, and then place my TP back to recent high. That's over 1 to 2. That makes sense. That would have been achieved. Then I can set up another one here. Well, this is coming down. I could set up, if I had this here, let me close this one. So if I was trying to play this, I could set it up to just below this point and maybe below swing low now that I have a new swing low, and try to play this swing high if it's 1 to 1. So that's about 1 to 1. We could have played that too. So if I was trying to do that again, I could set up another one here, try to play this based upon one of these closes here. That open would be right there. I can move my stop loss to below this swing low and below the 200 EMA. So these are all valid trades, and I could put this here, which isn't 1 to 1, so now I have to try to extend this to 1 to 1 to make it a valid trade. That would be a little bit risky to take. We would have to wait for price to come up here and see how it tests this. Ultimately, if it didn't create a new high, we do have a profitable margin or an area of profitability where we can close the trade before it comes back to the 200 EMA. But you could play this all the time, the whole time, until it stops working. One of these times, you're going to take this position where you're like, okay, is the uptrend continuing? Like if we're right here, we don't see this is happening. We don't know any of this price information that's going on here. So we see this bullish pin bar. Let's just say we're spectating on this. We see this bullish pin bar here, and we're like, okay, we want to try and take a position. That's a little far away from the 200 EMA, but based off the bullish pin bar, we think that price might continue going upwards here. Although we are seeing technical series of lower highs and lower lows, we're not going to dispute that right now. if we're trying to trade this strategy because I just used it in a point where it would be successful because I used it in an uptrend. If we're trying to trade this strategy now, and here we get stopped out. So once we get stopped out, we wait. That's a death cross. Now we change up the strategy. Now we observe a death cross, so now we're trying to short. So we wait for a retest, and we can try to short this one. We would probably be stopped out of this. Looks like we would be stopped out of this. But again, that's an example of how you will trade the strategy. So moving forward, let's see how that worked. I don't even remember what the data looked like. Cool, so that one would have been a win. And that's how you'll trade. So you can continue to chase it down by adjusting your stop loss, or wait again for another potential entry like this right here. And that is how you will make use of the EMA cross strategy. So I hope I didn't confuse you too much. If you have any questions, please leave them in the comments below, guys. Thank you very much for spending your time watching this video, and I look forward to seeing you in my next video. Take care.